Hi, this is Ushnota Paul. Welcome to Market Makers. This is where we have interesting conversations with people from business and finance. Today we have with us Mr. Sudip Bandyopadhyay, Group Chairman of Inditrade Capital. We would be talking about a bunch of things with him today, his company, this year's budget, and more. So let's start today's show. Welcome to the show, sir.
Thank you. Thank you, Ushnota.
So let's start with your company. Could you talk us through Inditrade Capital's business model?
I think we are completely focused on semi-urban and rural India. Our idea is to facilitate and take finance and financial services to people who don't normally get serviced by large financial institutions and banks. We are into microfinance. That's our largest business segment, where we provide loans to women in rural and semi-urban India through a joint liability group. We are one of the RBI registered NBFC MFIs. That's a subsidiary of Inditrade Capital. We also have an NBFC, which again works with small and marginal businesses. So these are typically mom and pop shops, kirana stores. We provide small loans to these entities, and we try to help them taking forward their businesses. We have a business which facilitates small and medium businesses to borrow, not only from us, but from anybody else in the market, any other lender in the market. It's a digital-driven distribution house called Inditrade Scalerator. We have a business which also provides, white goods and other consumer durables to the same segment of the population, and predominantly operating in rural and semi-urban areas. It's called Inditrade Rural Marketing. We have an insurance broking business as well. So it's a clutch of businesses focused on the same target segment, trying to make or take finance and financial services to hitherto underserviced people.
Right. Thank you, sir. So Inditrade Microfinance, like you mentioned, merged with the Kolkata-based Janakalyan Financial Services last year. If you could tell us what was the objective of that merger?
Ushnota, we were present in 9 states, we meaning Inditrade Microfinance. So our core area of operation was southern part of India, Tamil Nadu, Karnataka, Kerala. These 3 states, almost 80% of our business was concentrated. And we had no presence whatsoever in the state of West Bengal, which is a good market for microfinance business. Now, Janakalyan has an established leadership position in West Bengal. And when we wanted to be in West Bengal, I think this was a great opportunity for us. They, of course, have business in Bihar as well as Orissa and a little bit in Northeast India. So we thought, instead of reinventing the wheel by starting our own microfinance branches in West Bengal, Bihar, and Orissa, why not combine with somebody where we have like-minded people? So we announced the merger on 7th of October. It's under process. There's a long regulatory process that's on now.
Okay, great. Okay, India's the microfinance industry, as you were mentioning, it was kind of dented by the pandemic-triggered lockdowns. Now with the economic activities reviving, what's your outlook for the microfinance industry?
Well, you're right. It was dented like any other business. Now, I will tell you the big difference between microfinance and any other lending. Here, it's people are borrowing for livelihood, not for lifestyle. So, when you buy a Mercedes with a loan, that's a lifestyle lending. Whereas here, the women and, small and marginal employees in different organizations, they're borrowing for survival. They're borrowing for their working capital. Now, if they don't get the finance, they will not be able to put bread on the table. Yeah. So we have seen this. We've seen this getting played out multiple occasions. We have seen demonetization. We have seen floods in different states, cyclone in Orissa. Whenever this kind of a natural calamity or something else happens, there is a challenge because the this segment of the population gets affected first.
Right.
So they are not able to repay immediately the loans. But we've seen this trend getting played out again and again, that after a period of time when things recover, they come back and pay. And the track record of microfinance historically has been between 1 to 2% NPA. And this is the industry figure I'm talking about, not Inditrade microfinance per se. And this is maintained. So the difference in Corona, COVID, or whatever you say, was that, look, in a cyclone and a flood, or other kind of natural calamity, the customers lose some of their physical assets. Maybe cattle gets washed away. Maybe whatever the tenement huts or whatever they have gets damaged. Here, nothing happened. Yeah, there was a stoppage in their earnings. They couldn't continue the business, so they didn't earn, but then they didn't lose asset. So I am expecting the recovery to be much sharper, and that's what is happening.
Right, that's great. Good to hear that. Also, in this year's budget, the government focused on reviving rural demand. Do you think this will drive rural consumption?
It should. In fact, the government has been talking about reviving rural demand, and it's extremely critical for a lot of businesses and overall economy that the rural economy revives, rural consumption comes back. It does help us indirectly as well. If money is in the hand of the rural population, we do benefit as well.
Correct. The FM also promised greater support to the agri-tech sector in this year's budget. That was a very important point. Do you think it will help in improving farmers' income?
Of course it will, because you see, the green revolution was probably the last time there was some concrete steps taken for rejuvenation of agricultural sector. We have seen services sector taking lead and establishing India's flag in the world map. We have world-beating technology companies from India. Manufacturing finally has got a lot of boost by way of PLI schemes and other things. Definitely, agriculture needs also support, and that support doesn't mean some subsidies or some MSPs and all that. Of course, that also is required because there is distress. But beyond that, structural reforms are required, and some of these agri-tech companies can bring that.
Right. Also, since Inditrade itself deals with agri-commodity finance, how will things change for your company post this year's budget?
Well, Ushnata, unfortunately, we don't deal at that level. We finance against stock of agricultural commodities. Like maybe your company or some other companies do lending against shares. We lend against stock of commodities. So we don't reach out to the farmer. Mostly we deal with the processor, manufacturer, or the buyer of the commodity, where we finance the commodity buy.
All right. So, coming to the quarterly results, how was the last December quarter for you, and which segments were the growth driver?
Well, microfinance has been picking up, and microfinance, we believe, will pick up significantly in Q4 as well. There has been challenges on account of past asset write-offs and all that. So we had taken quite a bit of write-off and cleaned up the books. We believe that Q4 will be a much better quarter. And as far as Q3 is concerned, microfinance did well. So did our agri-commodity business, because agri-business is pretty much cyclical. We have the Rabi and Kharif season. So
Yeah.
Q3 historically is a good season. So that business did well.
That's great. So, do you see a rising interest rate environment affecting the company's business, especially the microfinance segment?
Not really. In this segment, finally, after a lot of wait, RBI has freed the interest rates with effect from 1st April 2023. 22. 1st April 22, RBI has allowed board of microfinance companies to decide on the interest rates. So I suppose if interest rate keeps going up, it will be passed on to the consumers. And at that level, the consumers don't mind paying extra, because the alternate to microfinance loan is money lender. And we all know what kind of rates money lenders charge. So
Yeah.
for our target customer, microfinance loan is always welcome.
Right. So, in terms of growth in the next quarter, what's the way forward for your company?
Well, I think we are rapidly expanding the microfinance book in Q4. the disbursements are almost at pre-COVID levels on a monthly basis, and we expect the momentum to continue. So microfinance should do very well in Q4. Some other businesses also are picking up, while agri will be a bit slow during this quarter. Our distribution, which is the digital distribution business, which I talked about, loan distribution, that's doing very well. We expect the insurance piece also to pick up very soon. So overall, it will be a mixed bag. We have 5 different businesses, and there are seasonalities, but by and large, we are expecting a good quarter.
Great. Okay, now we will move on to the next part of the interview. You are well known for your investment advice. So for investors who are just starting out, A, how much money should they put in the markets? And B, how can they benefit by investing in equities?
Well, I think, Ushnata, everything will depend on the age profile and risk appetite of the investor. Now, if it's a young person who has 20, 30 years of earning left in life, normal earning left in life, I would recommend that they should put at least 30 to 50% of their earnings in equities or equity-related mutual funds. I think Indian equity market will continue to provide best-in-class return amongst other asset classes. So under the circumstances, if your risk appetite is there, you should invest in equities. Of course, on the other hand, if you are nearing the end of your career, you have a lot of family obligations, and you can't afford to lose any money under any circumstances, then it's better to play safe. And under today's environment where interest rates are going up, it may be a good idea to invest in debt securities or debt mutual funds as well.
Okay. All right. Something that our viewers would definitely want to know. Could you tell us a few smart ways of investing in equities?
Well, I think a couple of things I must tell. Equity investment is a art and a science. It is not what you should do based on some tip or some thing which you hear in the bus or in the train. You should either study yourself, and if you are adequately knowledgeable, then you can directly do it. But I would strongly recommend that you seek in somebody's counsel who is aware, maybe an advisor's counsel, or best part for an investor who wishes to invest but doesn't have time, doesn't have an advisor, is to use the mutual fund route. I think that's the safest way to invest in the market. Mutual funds have experts whose job is to find best possible avenues for their clients, for their customers, and it's better to trust them. The second thing I would say, which is very important, is be in the market for a time. Don't try to time the market. Today the market is down, let us invest. Tomorrow market is up, let us exit. Please don't do that. Decide to be in the market for a 5-year period, 10-year period, and invest with that objective. Market will reward you. A lot of wealth has been made in Indian capital markets over the years, and it will continue to be made. So be patient, be a patient investor.
Right. So in all these years, when it comes to trading, were there ever any mistakes you made? If you could share that, then probably our viewers can learn how to avoid that.
Well, you make obviously mistakes. And I think, as people say, unless you make mistakes, you never learn. So we do all make mistakes. But the question is, how well you learn from the mistakes and how quickly you rectify the mistakes and move ahead. I think that's what is important. And honestly, when we started, mutual fund industry was nascent. It didn't have the kind of schemes today we have. So we didn't have the opportunity of using the mutual fund route and minimizing the mistakes. Whereas today that option is available. So my strong recommendation for the beginners would be to use the mutual fund route, get their feet wet, understand a bit, then only think of directly investing.
Right. I think a lot of people get demotivated in the starting of their trading journey when it comes to incurring losses. How would you advise them to deal with losses?
Well, you should be dispassionate. First of all, I would say if you have made a bad investment, just book the loss and get out. Second, as I said, if you have picked up a good stock, by which I mean a company with in the right sector, with right balance sheet and the right potential. Now, how do you know whether it's the right sector, it's got a potential? It's just by understanding what the market, what the analysts are saying, what multiple research reports are saying, and what overall the market momentum is. If that is in favor of a sector, that is also showing that a company is doing well on a continuous basis, it's a management of a good pedigree, you remain invested. Even if the price comes down after you have invested, there is absolutely no need to panic. Most investors lose money by panicking and exiting. I think that's one thing you should always avoid. On the other hand, if you realize you have made a mistake, you have made a mistake in selecting the stocks, by all means, quickly book loss and get out. But on the other hand, if you have picked up a good stock, please remain invested. There is absolutely no problem.
Right. So lastly, I think, could you list down 5 do's and don'ts when it comes to trading?
Well, the first thing is, please don't invest without understanding. If you are planning to do it directly, use expert advice, either from your brokerage house or through a mutual fund route. The second thing, invest in the market for a time. Decide whether you want to remain invested in the market for a year, 2 years, and accordingly select your stocks and invest. Third, don't panic and exit if after you buy the price comes down. There is absolutely no need to panic. Markets inherently are volatile. It will be going up, it will be coming down. If you have selected the right stock, be patient. Finally, I would say you should always try and book profits. Let's say you have a target of remaining invested for a year and you have a goal. Once you have achieved that goal or completed that 1 year period, book profit and exit. Don't fall in love with the shares you are having or investment you have made. Book profit and exit.
Right. It was a pleasure having you in our show, sir. To everyone watching, if you liked watching this video, do not forget to like and share it with your friends. Subscribe to Upstox for more such content. And thanks once again for coming, sir.
Thank you. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.